Hi, this is Zach here with the pre-market edition of the Bulletin Board Heroes. It is Tuesday, the 13th of September. Starting off with the FTSE 100, where it's nice action at the moment above the 50 and 200-day moving averages. They're both rising again, which is decent after a slight disappointment earlier in the month, and that means we're theoretically once again in the run-up to a golden cross, which tends to be, and traditionally is, the strongest part of the cycle. Bounced off the 200 or the 2-year uptrend line there once again to start September, as we did multiple times during June and July. Just need to break that line of resistance from April around 75.70 to open up with the possibility of a move to the top of that rising trend channel from basically this time, well, actually the 2-year trend channel, but as you can see this time last year on this 1-year view, the top of that channel heading to 8200, which I suppose if one is optimistic would be a 2 to 3 month target, maybe a bit less, but the key here is that we break that April resistance line and ideally stay above the 50-day moving average at 73.50, only back below 70-20 in the floor of that channel, really upsetting the idea of either sideways or upward trajectory for leading shares. Moving on to Bitcoin, which is managed to improve itself over the recent past. Here we had a brief bear trap below 19,000 over the last week, which was early July support, so that main 19,000 area holding, and all that's left for now is to break the top of that falling November trend channel around 22,400. So far we haven't done it, but we're trying to do it. If we can break that 22,400 area, then the next level up would be towards 25,500, which was the old May support and August resistance. The best case scenario target here would be up to 30,000 at the 200-day moving average. The last time we were up there at the 200-day line was back in March, so it would be quite an achievement. But what you could say actually is that even if we we maintain that bear run, even within that bear run, we can head up to the 200-day line. So 30,000, a possibility at the moment, especially after a bit of bullish divergence with that last bear trap below 19,000. On to the stocks, and obviously these are yesterday's winners, or the late winners of yesterday, because obviously we covered them earlier in the day. 1.9 pence, that trend line break for Armadale, the April resistance line. Closed above the 50-day moving average yesterday, around 2.25, and above that, looking for 3 pence at the top of that falling trend channel from the beginning of the year, and the time frame on that by the end of this month. We hope we could even stretch up to 3.6 pence sometime in October, which is where the 200-day line is. And a bit like Bitcoin, the last time we hit the 200-day line was back in March. Stop loss 1.9 pence and that broken resistance line. On to Alkemy, which recently raised money and has been improving itself over the recent past. Here we've had a gap higher through the 50-day moving average, also through that line of resistance there from back in April. Probably if you're cautious, you wait for an end of day close through the 200-day moving average at 115 to give us at least a retest of the 135, 140 area, which was resistance on the way down. Still following that uptrend line in the RSI window, so that is good. Best case scenario target maybe over the next 1 to 2 months would be a retest of April resistance towards £2, but early days yet. But at least the upside looks to be now well in place while we're above the initial September resistance around £1. Moving along to Bidstack, which has also broken a resistance line. It's also broken a resistance line, one from January, broken the 200-day moving average, which is rising at 3.25, and broken the 50-day moving average, rising at 3 pence. That means that we're in the run-up to a golden cross, and shares already responding in kind, up 17% yesterday. That should mean we could hit the 5 pence area, which is March resistance, over the next 2 to 4 weeks. If we're really lucky, we'll do that by the end of this month, and just looking like a very good setup at the moment with that, as I said, with those rising 50 and 200-day lines. The reason for the optimism is that one could see the shares hitting the top of the rising trend channel I'm just drawing at the moment, at 7 pence sometime over the course of the autumn. So it looks like a big positive change there for Bidstack, and fully justified in terms of the technicals, and maybe warranted in terms of the patience of the shareholders there. On to Hurricane, and here we've had another trend line break, in this case a March one, through the 8 pence area, and also breaking post-July resistance as well, just around 9 pence. The longer we stay above 9 pence, the greater the chance of a move towards 16 or 17 pence by the end of next month, in a long-awaited move, given the way that we've been consolidating for months here on the daily chart. You can see that resistance line there from back in the summer of 2021. So looking for 17 pence or so while we're above, at least while we're above the 8 pence area on Hurricane. Stock which I don't normally look at, but it's here today. Luceco is one that looks like it's turning around. We hit new lows, so bear trap below the June support there at 92 pence. That was there for August and the beginning of this month. Now we're above 92 pence and the 50-day moving average at 99. We got through that yesterday, looking for as high as £1.70 by the end of next month, or as soon as the end of next month, coming off that very overbought state. And really, the ideal scenario, as I said, is we stay above the £1 level ahead of a move initially to around the 135, 140 area, but then, as I said, towards 170 plus later in the autumn. Lots of positive noises about Mast energy at the moment, and worth looking at the chart. Here you can see that we've broken through the 50-day moving average, and I think that's the first time since back in February, which is an achievement that does suggest that we could have reasonable upside within a broadening triangle turnaround. So looking for something in the way that I'm going to draw at the moment, if I can do that successfully. That is hinting that we could head towards the 200-day moving average area. That's at 5 pence, but at the top of that broadening triangle from May is up to 4.5 pence, and we could see that as soon as the end of next month if we can get another decent end of day close above the 50-day line. But bear trap reversal from below 2.5 pence and looking for 4.5 over the next 4 to 6 weeks, something like that. One of the top risers of the day, if not the top riser, was Wildcat, a gap through the 50-day moving average around the 0.9 pence area. The current view is that while we're above yesterday's low at 0.97, we could head up to the 200-day moving average at 1.8 pence over the, well, maybe as soon as the end of this month, and maybe over the next 4 to 6 weeks as high as 2.5 pence, which is the top of that falling trend channel from this time last year. But the longer we stay above a penny, the better it looks there for Wildcat. Finishing off with a stock which I think I covered a few days ago and seems to be doing well, maybe against the odds. Zinnwald looked like a bit of a sort of a long shot, but actually the share's really done well since breaking the 9 pence area at the end of last week, and breaking that resistance line there from June, and very pleased that we're already very close to that 12 pence initial target. Well, now it's the initial target. The 200-day line there at 12 3/4. Otherwise, it should be up to as high as March resistance around 15 pence, maybe as soon as the next 2 to 4 weeks. Upside valid while we hold above the 9 pence area and basically yesterday's resistance. That's it for me today. More updates tomorrow.